First of all, welcome everyone. Thanks for coming out tonight on this sort of crummy weather. And as is the curse of progressive slash radical New York, you're always competing against interesting things. So half my household is at another event tonight. So thank you for choosing ours. A couple of thank yous before we get started. Jen Burge, Katie Hayden, Monica Duncan, and of course, our panelists for making our event possible tonight. I have a couple of announcements before I start talking about our event tonight on thinking beyond the market, decommodified housing. On May 8th, put this on your calendars, please. We have a very exciting event on municipalism. Right around that time, New York City is going to be hosting a smart cities kind of event, and we thought we would do a people city kind of event to go alongside. We have as our guests Gerardo Pisarello, who is a deputy mayor of Barcelona. We have Kali Akuno, who is one of the people behind the Cooperation Jackson movement and government in Jackson, Mississippi. We have Margit Mayer from Berlin, and we have one of our electeds will be joining us as well, and our moderator will be Juan Gonzalez. It's going to be a very nice event, and it's going to be a nice opportunity for us to think about the possibilities and limits, of course, of municipally driven strategies of resistance and social justice. All this and more is at our website, urbandemos.nyu.edu. Okay, so let me talk a little bit for 2 minutes about what brings us tonight together, and before I introduce the panelists. And I have to first begin with an acknowledgement. So just a couple of weeks ago, I was part of an effort with Right to the City. We released a report called Communities Over Commodities. That was the combination of a 2-year study and research project around non-market alternatives. As we're going to talk about in a minute, and as I'm sure Tom is going to put in context for you, we are living through this protracted housing crisis, and we are experiencing many things, but one of the things we're experiencing with it is a poverty of the imagination. We really have very limited imagination when we think of policy alternatives and tools to address this housing crisis. So what we do in this report is we highlight, and to use the Right to the City language, we uplift 4 kinds of decommodified or non-market alternatives that we think are successful and could have some traction in the United States. We're going to talk about land trusts shortly, but we also talk about limited equity cooperatives, which have a history here in New York, but also a Latin American model, the mutual aid cooperative, and the tenement syndicate, which comes from Germany, but is present in other places in Europe. So we've rolled out this report, and the acknowledgement I wanted to make is that it relies on a prior report that we did in-house. That one was called Under One Roof, and that too was the result of probably a 2-year process. One of its authors is back here, Sarah Duvisac. Thank you, Sarah, for all your good work. Our report is currently embargoed, but as soon as we're finished rolling this out, we're going to release our report as well. It's essentially kind of a background, more academic version of this one. So the question tonight is, what are non-market alternatives? What does it mean to think beyond the market? Should we be thinking about non-market alternatives for housing, and what would that look like tangibly? What would the first steps look like? What would the subsequent steps look like? And what are some of the questions that we have around it? For example, certainly people mentioned Dudley Street in Boston, people mentioned CLTs in Burlington, Vermont, but can these things scale up? For example, can they be truly inclusive? And when we talk about the people who are part of our movements for just, dignified, and affordable housing, is non-market housing something attractive, something people tell us all the time, for example, is people see housing as a way to build wealth and to build intergenerational stability. So non-market housing brings with it a lot of questions, and we're hoping to celebrate the report, celebrate Tom's very excellent recent book as well, celebrate our work, but also ask some of these tough questions. So to do so, we got pretty much the best crew of people we could to work on these questions with. So to my immediate right is Anya Irons, who's Director of Operations at UHAB, which is the Urban Homesteading Assistance Board, and has been at the organization since 2007. She serves as UHAB's General Counsel. She's the sole in-house attorney, Director of Co-op Development, and oversees the rehabilitation and co-op conversion of UHAB's development pipeline. With legal matters an integral part of preserving the affordable co-ops created by UHAB, she helps ensure the survival of this unique form of home ownership and fields issues on co-op management and interest inheritance. Her other legal specialties include elder law and wills, trusts, and estates. And she's a graduate NYU Law School. Good job, NYU. No.
New York Law.
New York Law School. Oh. I was pleasantly surprised for a minute. Good job, New York Law. NYU Law, why aren't you doing this? Next to her is Val Orselli. He's project director of the Cooper Square Community Land Trust, where he's currently engaged with the NYC Housing Preservation and Development in transfer of ownership of 2 buildings to the Land Trust, and an Article 11 application to the NYC City Council abating past and present real estate taxes. From 1997 to 2017, he was executive director of the Cooper Square Mutual Housing Association, a 21-building scatter-site nonprofit co-op. And while directing the MHA, he negotiated Title 11 tax abatements for all of its properties. And from 1977 to 97, he was ED of the Cooper Square Committee. And as part of that negotiating team, he negotiated a revised plan for Cooper Square, which resulted in a cross-subsidized new construction project and a $21 million city commitment for the renovation of 21 MHA buildings. Next to Val is Mo, who joined Picture the Homeless as executive director in January 2017. Mo formerly worked with Community Voices Heard, another friend of ours, often called PTH's sister organization. During Mo's time at CVH, Mo was the NYC chapter director of organizing. Mo worked to advance CVH's NYC chapter work, which ranges from the preservation of public housing, supporting the need for low-income housing, and participatory budgeting. Mo has in addition worked as an organizer on a range of issues, NYPIRG, SIU Local 1199, and the Empire State Pride Agenda. And at Pride Agenda, Mo worked on various statewide campaigns, including being the lead team that developed organization strategies to win marriage equality across New York State. And Mo has a bachelor's degree in Black Studies and MA in Public Administration from Metropolitan College. Mo is also a proud product of public housing. And finally, Tom Ngati, Professor Emeritus at Hunter's College Urban Policy and Planning in the Graduate Center at CUNY. He has also served as director of the Hunter College Center for Planning and Development. His earlier book, New York for Sale, Community Planning Confronts Global Real Estate, won the Paul Davidoff Award in 2009 and International Planning History Society Book Prize in 2010. Among his other books are Zoned Out, Race, Displacement, and City Planning in New York, The New Century of the Metropolis, Enclave Planning, and Urban Orientalism, in Metropolis 2000, Planning, Poverty, and Politics. Through the CCPD and in collaboration with others, Tom has completed studies on New York City's Plan NYC 2030, Walmart, NYU's expansion plan, Fresh Direct, and Atlantic Yards. He has collaborated on very many community-based plans and written about community land trust. He's the founder and co-editor of Progressive Planning Magazine and a participating editor for journals Latin American Perspectives in Local Environment. So thank you all so much for coming, and yeah, we look forward to the discussion.
Hi, I am going to moderate this evening, but I have to confess from the beginning I'm not moderate. So I will do the best as I can to very quickly try to frame the whole discussion and then ask each of the speakers to give their ideas of alternatives to the market. And the first thing that's important to lay on the table is why do we need alternatives? Well, you remember Margaret Thatcher said, there is no alternative. There is no alternative to the market, to capitalism. And that is the meme that we all hear all the time. If you want more public funding for publicly provided housing, you can't have it. There is no alternative. Look to the market. The market is, look to the market to solve the problem of homeless people, the problem of people who can't meet the rent, the problem of the people, more than 50% of the population in New York City who are renters, who are paying more than half of their household income for rent. There is no alternative, okay? So that's why it's important we talk about alternatives and push them. The other thing is that there's no alternative to is the American dream, right? The American dream is that everybody owns their own home. Well, where did this come from? This came from a settler mentality at the foundation of the United States, in which people took land, they stole it in the process of committing genocide against native people, and then became owners of the land, and that ownership was codified in the U.S. Constitution. That's the American dream. Is that the dream that we all pursue when we look at housing policy? Let's fast forward, though, to another important event, series of events. 2008, the collapse of the financial system, and based on the financialization of the mortgage market. That is, it's not anymore just the purpose of the housing industry here is not anymore to provide places for people to live. It is now an object of financial investment. It's the financialization of the housing sector. So if you, so now we look at the proportion of homeowners in the United States is declining as a result of the fact that of the abandoned homes due to the financial collapse. And they're now being rented. Many of them are vacant and so forth. So this gives rise, it makes it even more urgent that we examine potential alternatives. And I will just lay one other item on the table that maybe we can come back to later in the discussion that I think is sort of has to be at the center of all of our alternatives. And that's the concept of community land. That is, it's not just a housing crisis. It's not just the housing market. It's the land market. Since we're a highly urban society, most people are living in cities, it's what makes housing unaffordable and unavailable is the land market. That's the foundation for high housing prices, inaccessible housing everywhere. It's the foundation for racial exclusion in suburbs and for racial exclusion in cities, large cities like New York City as well. So let's explore the alternatives, cooperatives, community land trusts, and activism. I always am asked for my alternatives, and I say there are really three: organize, organize, and organize. And we won't get anything unless people organize. So let me start with UHAB.
Sure.
And perhaps you could tell us what UHAB is doing and has done, and how it relates to how it can provide alternative means of housing.
Okay. Thank you for having me. UHAB began in 1974 out of what was, urban blight around the country. We started as an organization that would connect with individuals who are interested in taking over some of the abandoned housing in and around New York, we would train, we'd get together and train as individuals to repair these buildings, and what might now be considered squatting, it was more homesteading, taking over buildings, improving them, and residing in them, offering those kinds of trainings to the public, anyone interested in doing so. What this evolved into was the cooperative movement to occupy buildings, to live in a community within those buildings and think of them more as joint property than actually individually owned apartments. This is a concept that since 1974 has expanded into UHAB now is a developer of limited equity co-ops, mostly through city programs. We still offer the trainings that we did at that time, less construction trainings. It used to be a lot of literal hammers and nails type work, that not that so much anymore. But we do a lot of governance trainings and shareholder education trainings, how to get along, how to work with your manager. We have an insurance program for low-cost insurance that we offer member co-ops. We tried to get our own insurance company off the ground, but that didn't work. We now are actually making loans to limited equity co-ops, something that's been problematic. Let me see, what else? Well, our organizing department is still alive and well, as you know personally. We do a lot of outreach, helping tenants solve their own housing solutions. That's our motto, really. It's not that we are pushing the co-op model on anyone, but we want rental tenants to be educated about what their housing options are. We'd love it if they chose co-op, but if that's not where they ended up, that would be fine too. It's really about empowerment, education, and gaining control over your own living destiny, your home ownership destiny, or your rental destiny. So in that process, we have developed about 34 co-ops since 2008 through mostly HPD programs, and that would account for about 300 to 400 units of affordable housing in the city. We also work with developers, other for-profit developers, to try to incorporate some co-ops in various configurations, condops, all kinds of mechanisms. Any way we can squeeze a co-op into a building, we'll do it. But mostly occupied buildings, rarely new construction. So our work is tenant-focused, tenant choice-focused, and there's a lot to say, but I'm sure I'll get to it.
Okay, yeah, we
Oh,
should
in
come
terms
back.
of the future and where we see it as an alternative for the future, this is a struggle for us because, as I said, we work mostly with occupied buildings. So it's not about identifying a vacant piece of land anymore. It's about finding a building that somebody doesn't already own and figuring out how to convert that from a rental into a co-op. This is a challenge. A lot of our work is now focused on preservation, but we have also started to partner with Habitat for Humanity, Manny, and the Center for New York City Neighborhoods to form a land trust, which will be solely dedicated to cooperatives on that land trust. So we are in the process of incorporating and drafting our partnership documents, but that's where we see it going.
Could you
honestly.
explain to folks, in case somebody isn't familiar,
Oh.
what is a limited equity co-op?
Oh, of course. I'm going to throw out a lot of terms of art. I'm sorry. Is this working? Really? You hear it? Oh, I'm sorry. So a limited equity co-op, sometimes referred to as a shared equity co-op, is essentially it's a corporation wherein individuals own shares in that corporation, as opposed to owning their actual apartment and deed, as in a condominium. They own shares in a corporation, and the value of those shares is limited by some restrictions, some programmatic restrictions limit either the sales price or the income of the individuals purchasing those shares. It's directly tied to a proprietary lease, which is akin to a rental lease. However, this is the relationship between the tenant and the corporation, and it allows them to actually occupy the apartment. So there's no ownership of the apartment. There's an ownership in shares in a corporation. So this about value, it's about the value of the corporation, which is really, it's not really existent. It's not comparable to the market at all because of the restrictions that are on them.
Okay, so Val Orselli can tell us about Cooper Square Mutual Housing Association and the Cooper Square Community Land Trust.
Okay. The Cooper Square Mutual Housing Association and the Cooper Square Community Land Trust were each created, incorporated back in 1994. But our history actually begins long before 94. It began with our parent organization, the Cooper Square Committee, that was founded in 1959 to oppose a plan by Robert Moser, the so-called master builder, on the section of the Lower East Side by Cooper Union, to give you an idea of where we are, that would have displaced 93% of our population and replaced them with upper middle income households. The committee was successful in defeating the Moses plan, which was no mean feat, and securing approval of the alternate plan for Cooper Square, which stated some very radical principles, although you're going to smirk when I tell you because they look like common sense. One principle was that urban renewal tenants should be the beneficiaries and not the victims of urban renewal. A second principle was that development should take place in stages so that not everyone would have to be moved out at the same time and then wait 30 or 40 years as it happened, for example, in Seward Park before new development took place. And the third principle was that since development may take time, people should be allowed to remain in occupancy until development was imminent. The alternate plan for Cooper Square, which was adopted by the city, was only partly implemented due to the lack of sufficient federal, state, or city funds for the full development as called for new construction. One building was built in 1985 with Section 8 project-based subsidies. We also got a senior housing project built the same year. And then there was no more funding for new housing, affordable housing at least. So the community came together the same way it had done originally. It called for many community meetings, membership meetings, building meetings, workshops of all kinds. And they came up with a revised plan for Cooper Square that no longer called for new construction as not being feasible, but called for renovation. This was also during the time of Mayor Koch being the mayor when he was promoting what he called economic integration. In few words, building luxury housing in gentrified neighborhoods. We realized that because we had an organized community that we could stop the Mayor Koch's plan, but we also had no money for new construction. So we worked with community planners, people like Walter David and Tom and so on, to come up with a revised plan that would meet what the city was trying to do while preserving our community. And essentially what we did, I call it, making a deal with the devil. Agreeing to let the city develop largely market rate housing on 2 vacant sites in exchange for 25% of the units to be for low-income families and sufficient funding to renovate all our buildings occupied and vacant at no cost to the tenants. And it didn't come easy. We had to organize, we had to demonstrate, we had to, picket, we had to get arrested. But the city eventually came to terms with that because we offered them something, not just we are against something, but this is what we can live with. And the city then agreed to our proposal, and they turned to us and said, under what program would you like to have your buildings renovated? And in those days, they had still urban homesteading, community management, and TIL. And we looked at them, and we basically were very skeptical of all those programs. Our families back in '85 had an average income per year of $7,500 per unit, per household. So we looked at it, and that TIL in those days paid for one or more systems, but not all of them necessarily. Community management paid for all the systems for renovation. But the end result was standalone, single building co-ops. And we felt that that was not a sufficient guarantee of permanent affordability or long-term affordability that we were looking for. So we prevailed upon the city to create a new program that we had created internally, the Mutual Housing Association program. Essentially, it had several main components. One component is that instead of having individual building co-ops, that if they're truly occupied by low-income people, would have trouble when the building system eventually came to an end, of their useful life, and you got to replace a new roof or a new boiler or do major facade work, they would have had to either raise the maintenance fees or have a special assessment, which the tenants could not afford. So by bringing 21 buildings together, we created what we called an economy of scale. We were able to create a common reserve fund, each tenant paying the economic rent to basically pay for the expenses, plus a little extra to go into the reserve fund. We were able to share commercial income amongst all the buildings. Half of our buildings had storefront space, half did not. If there were individual co-ops, half would do well, half would not do so well. By bringing them together, we shared that income. And by doing so, we have managed to keep the housing affordable in terms of the expenses, not based on the legal requirement, which is 80% of area median income, and not even our internal goal, which is 50% of area median income, but housing affordable to families from 26 to 36% of area median income. That took, in some ways, care of the long-term affordability. But there are other problems with the TILD program and similar city programs, and that is there was a deliberate attempt, I believe, during the period of Rudy Giuliani, but probably before him and after him, to look upon the housing as commodities. Limited equity co-ops means you can't sell the apartments, at least legally, for market rate, but you can still make some money. That means that the next occupant that takes over the space is not going to be as low income as the prior occupant. And to reinforce that idea, the city had a book they call Frequently Asked Questions, FAQs, for people entering the TILD program. One question was, how soon can I sell my apartment? And the HPD correctly stated, you can sell shares in your apartment as soon as you take ownership of your property. But you're better off waiting until renovation is completed because you can get more money for it, okay? That was those who wanted to make money from their apartments legally. But there was also plenty of under-the-table sales of apartments, illegal sublets, and so on, for which the city had regulatory agreements, enforcement mortgages, okay? That if you violate those rules, all the money they gave you could be asked to be given back, okay? The problem with that is that a piece of paper is not self-enforcing, and there was no enforcement mechanism. So we said we need something more than that, and that's how we came up with the notion of a community land trust, okay? The community land trust, when the city transfers ownership of buildings to the Mutual Housing Association, the Scatterside Co-op, allows the co-op to own the buildings pursuant to a 99-year lease with the community land trust, but the land trust retains ownership of the land. By virtue of the land lease, the CLT has representation on the board of the HDSC co-op, okay? It helps to influence decision-making, policy-making. It also has the ability to monitor, to steward the housing. So if there's major violations of the ground lease or the regulatory agreement, it's not going to be a piece of paper saying, hold on, you can't do this. There's people on the CLT board that can blow the whistle and can actually remove the board of the CLT, of the MHA, the MHA, to restore it back to compliance with all the agreements. What we're looking at is not financial equity, but truly nonprofit ownership by virtue of promoting social equity. By being able to create a program that benefits not the few, but the many. That means multiple generations that retain ownership of the housing. The people who occupy those units can afford a better education, travel, health care, or to even engage in activities, social or work-related activities that may not pay the best salary, but which give them the best satisfaction and help to promote family life. And that is what we're promoting, social equity.
Thanks, Val. I know you both put out a lot of terms, and there are probably going to be questions, but we'll come back so people can ask questions of the speakers later. Okay? So now let me turn it over to Mo George, who's the Executive Director of Picture the Homeless. And can you tell us something about PTH and banking on vacancy, study, and everything else that PTH is doing?
So I can tell you about what PTH is doing now. I've been the director at PTH now for a little over the year. I wasn't here when we did the banking and vacancy report. But what we're doing now, just a little bit about who we are. So PTH is 19 years old, started by two men of color who were in the Bowery Men's Shelter, who wanted to launch an organization that was actually represented by people who were directly affected by homelessness and no longer wanted to be told what homelessness looks like. So they founded PTH. Here we are 19 years later, an actual organizing organization. We don't do service. And really winning and shifting policies that directly affect homeless folks in New York City. Most recently, as of Monday, our latest report is called The Business of Homelessness, where we talk about calling on the city and the state to move away from the business of homelessness, which is, increasingly putting upwards to $1.8 billion into a shelter system and really moving that money into affordable housing and CLTs. As a means of actually shifting folks to permanent housing and not just temporary housing, and really call on those people who have been really profiting off of homelessness. Like, there's a number of, as we switch from scattershite, there are a number of hotels who get upwards of, $4 to $5 million a year from the Department of Homeless Services, and we feel like that money could better be utilized actually going into permanent housing. We also sit on the East Harlem El Barrio CLT. We were one of the founders of that CLT. In Harlem right now, we have 5 buildings in the CLT that are scattered across East Harlem. And the hopes is that as work begins with these buildings, which we were able to secure, Val and one other CLT in New York City was able to secure funding from the New York State Attorney General's bank lawsuit against the bank. And then they allotted the CLT $500,000. And then the former New York City Council Speaker, Melissa Mark Viverito, also donated another $500,000 for 3 CLTs in New York City to begin the work of starting to rehab buildings. So that's where we are right now.
Okay. Well, before we go to questions, I just want to throw in a couple other quick thoughts. So you've heard about limited equity co-ops. You've heard about gaining control over vacant units. And the banking on vacancy study that Picture the Homeless did something like 5 years ago, I believe. I would also add is an important lesson for us. Picture the Homeless counted in 20 of the 59 community districts in the city the number of vacant lots and vacant housing units. And just in that roughly 1/3 of the territory, there was enough land to provide housing for every single homeless person times 5. Okay, so if there's land and there are housing units available, why are people having to sleep in the streets and in shelters? I thought we were told that the market works and that when there's a need, the market will fulfill that need, right? We're always told that in the real estate capital of the world, that the real estate industry is what drives the economy, right? So you shouldn't interfere with the real estate industry so that it can meet the needs and build more. So they will build more housing units, right? But let's look around us at the housing units that have been built in the last 5 years. They're vertical cash registers. And sometimes as much as a fourth to a half of the building is vacant. The highest vacancy rates in housing in New York City are in luxury housing, the new housing that's being built. Why? Because housing has become a marketable commodity, traded across boundaries, across the world. It's become financialized. And you have investments by real estate investment trusts who have investors all over the world. They don't know New York City. They don't care. They're investing in something that's going to increase in value over the years for them. And then you have the many pied-à-terres, you know, investors from all over the world who are just putting their money in so they can come here 1 or 2 months out of the year and be tourists and then go back home. So the market is the problem, it's not the solution. And what we've heard are some alternative solutions. Now, I want to throw out the question to everybody. Why, if the problem is so grave and we know the market doesn't work, why aren't there more limited equity co-ops? Why aren't there more community land trusts? Why isn't government more aggressive in playing a more active role in providing housing for those who need it the most, instead of spending a couple of $2 billion every year to house people in uninhabitable shelters? Why not take that money and just provide housing? Why isn't it working? It seems logical.
You're asking all of us?
I'm asking. Yeah.
I just talked about the new report we just released, and it is really about the fact that the city, the administration, and our current administration and past administrations, you know, has to decide whether they're in the business of actually housing folks or in the business of homelessness. And if you're in the business of homelessness, homelessness is big business, right? It's big businesses for the Holiday Inn. It's big businesses for the Hampton Inn and a number of hotels all across this city who get multi-million dollars, upwards of $4 to $5 million, regularly to house folks in rooms that folks are not allowed to even keep an orange. In our new report, we talk about identifying some of our members who, right here in Manhattan, in a hotel room, the city pays $7,768 a month for her room, for her and her partner, and she cannot have an orange in her room. $7,768 a month. Now, what kind of fabulous apartment can we get for $7,000? And you would think we would say, well, let's give the person a voucher. We all think that that makes sense. I'm not pretty sure how the administration doesn't see that that doesn't make sense, and how spending over $80,000 a year for a room to Holiday Inn is more important than actually housing a family. And it only works if this is a business, right? And we are about, and that's what it is. It is about really real estate. It's about remedy. It's about the real estate, really real estate's actually profiting off the backs of homelessness and low-income New Yorkers in this city. When you look at this city, I live in Brooklyn. When you look at downtown Brooklyn, at the amount of luxury housing that's been produced just in a span of 6 blocks in downtown Brooklyn, there have been 32 luxury developments in downtown Brooklyn in the last 5 years. 32. Right? And each of them are only about 47% occupied, they say. So who are we building that for? You're not building it for the folks who were there. You know what I mean? So this city has to make a decision. It had to make a decision whether it wants to house those folks because New York City has a right to shelter, or it wants to continue to profit off the backs of homeless and low-income people in this city.
I don't have much to add to what was said by Bob.
Amen.
But basic picture is simply this. Aside from the industry of the shelter industry, okay, even in terms of the housing, the city prefers to spend $4,000 or $7,000 for a unit of horrible housing, like a room or a shelter, okay, when for that amount of money multiplied by a number of years, they could renovate or build affordable housing that once it is built within the context of a multi-building structure, you have enough buildings to create an economy of scale, does not need any further subsidy, as opposed to having to subsidize landlords to the tune of $4,000 or $7,000 a month in perpetuity, okay, for disgusting, horrible circumstances. In the building where I live on 2nd Avenue, we have a family has set up a home right outside the building, made of cardboard, and they lived there when the temperature outside was below 20 degrees. They preferred that as safer than a shelter.
Would you like to add something about co-ops? Why aren't there more co-ops?
Wow. Well,
Real, I want to know the answer to that, because trying to find one, oh my God.
one of the
Trying to get into a Mitchell-Lama, what's that?
Yeah. It's if I talk about the universe of occupied buildings, which is really, as the not-for-profit, what we have the resources to do. We can't really buy vacant land and build brand new construction on our own. So the tenants tend to take the blame for there not being more co-ops. Most of them are successful, contrary to agencies' beliefs and government beliefs. The difficult projects, or the quote-unquote failed projects, seem to be focused on. And so there's a real, in our opinion, bias towards occupied buildings, multifamily buildings, that are trying to become cooperatives. There are very many milestones that are put in the path towards becoming a co-op, sometimes realistic, sometimes unrealistic. Many of them actually came at our suggestion, we have to admit, but then they just grew into their own monsters. And it's just become increasingly more difficult for tenants to meet the requirements to become cooperatives. And also the banks that lend the money for the renovations, because I should have said, obviously all the buildings we deal with are distressed. There are no buildings that we're going into that are just doing fine as rentals. These are buildings where people are living in very distressed situations, so they need substantial rehabilitation, sometimes gut renovations, and sometimes tenants need to be moved out temporarily. So there's a lot of money required, and we have to go to banks to do that. Not many, only a few banks partner with the city, which can provide low interest money to do this work. What is called a participation loan with the city. A bank will come in and do that. Now, these loans, there's a market, there's a business, are invested in by various entities. I hesitate to name names. But they have a time, they have expectations on when these projects are going to be finished. So you have the tenants trying to catch up, and the timeline of the lenders oftentimes doesn't coincide. so we have a hard time convincing people to invest in the time it takes to actually create a co-op. That's our most recent challenge. It takes a long time to one, identify all the repairs that need to be made, potentially relocate the tenants, train them, get them in, file an offering plan with the Attorney General, explain what's going on to the tenants and what's going to happen, getting them used to the concept of becoming a homeowner versus a renter, which is a whole shift, right? And then actually doing what the city has now created is a very complex, time-consuming marketing plan, which has now added roughly 2 years to a timeline where a bank is expecting everything to be done in 36 months. So this is our challenge right now in trying to get more co-ops created out of occupied buildings. Where there is new construction, and we have been able to partner with a for-profit developer that we approve of, things have moved faster, and it seems to go more smoothly.
I'm reading between the lines, and it suggests that public policy is really geared towards pushing the co-ops into being home ownership and market. You know, if the government loans have so many conditions, and it's so difficult to sustain a co-op for tenants who have limited incomes, which is a huge chunk of the tenants in New York City, certainly in many cities, isn't it inevitable that we have these tensions within and among co-ops? Look at what happened with Mitchell-Lama. Mitchell-Lama was a very good program, but it was very purposely set up so that it would not be permanent.
Right.
Imagine if we had a constitutional right to housing that superseded the right to private property. A right to housing. Well, then you're in a Mitchell-Lama and you couldn't be kicked out when it goes private, right? But that's what happened with, 25% of the stock of Mitchell-Lamas in New York City, co-ops. So there are co-ops and there are co-ops, and this is the thing everybody knows in New York, that there are co-ops that can sell for $3 million, individual units.
Right.
They're private co-ops, and I think our experience at Cooper Square also suggests that once people have in their heads that they're living in a housing unit that has enormous potential value because prices are going up all over, land prices that are jacking up rental prices, well, then they dream of being homeowners, and public officials allow that to happen by not protecting the existing co-ops. Co-op City is a really interesting case. The largest co-op, I believe, in New York City, 15,000.
Probably, yeah.
Yeah,
Mhm.
it's the largest co-op, and it was a Mitchell-Lama. Maybe it still is. It is still. Yeah, and and it was financed through union pension funds, and it was had the good luck of being located on city land. It was reclaimed by our dear friend Robert Moses, and but they also had the longest, I believe, one of the longest rent strikes in New York City, 2 years, because the financial pressures were such that they had to make a choice of going market or not. And they did not want to go, or at least a large section of the tenants did not want to go market. So I think our alternatives have built in to them all kinds of stresses, because we don't have real support from the policymakers, from the agencies, from HPD, from the city agencies who who are responsible for supporting decent housing for everybody. It's all about seeing what the market can do, relying on banks for financing instead of bonds.
However, one thing, of course, that makes the limited equity co-ops affordable is the fact that the property taxes are either eliminated or significantly reduced, right? So they couldn't be affordable without the enormously high taxes being eliminated or reduced. And right now, that has an expiration date, right? So the city council is only allowed to forgive taxes for up to 40 years is the maximum. So at the end, so at that point in time, something's got to give, because whoever's there, even if they wanted to, would not be able to afford to stay there if the property tax is kicked back in. So one of the things that we think should happen, and as you said, organize is the key. You have to go and try to do something about perhaps having an automatic renewal, having automatic extensions of that property tax so that you didn't have to go back and beg and plead in year 38 or whatever and be at the mercy of some other policy decision. Something built in, that's just one idea that we had. If you can keep tax exemption kind of, not necessarily automatically, let's say the council still had to review it, but there wouldn't need to be a full-on review of the entire project. It's kind of, do we extend or do we not extend kind of thing.
And Val, do you want to say something
Sure.
about how Cooper Square units are so affordable because in addition to paying no property taxes, there's no mortgage to pay off?
First of all, most tax abatement programs are like for 20 or 27 years, or a little bit more, a little bit less, with a notable exception, which is the Article 11, which does provide for a tax abatement, including 100% tax abatement. Not always, okay? Depends on the finances of the project, the affordability level, and so on. But for 40 years, and at the end of 40 years, it expires. But unlike other programs, like J51, for example, it can be renewed if the shareholders or the tenants agree to retain its nonprofit nature, its low-income nature, okay? Which I think, to me, it seems fair. Some buildings that were built with loans, I think some return on equity is also fair, but the level of abatement under such an Article 11 should be proportionate with the level of affordability that you get under that. We talk about Cooper Square as part of the Lower East Side, and you may or may not relate to that because now the Lower East Side is like, the below Houston Street area, but this is the Lower East Side, but it's more commonly known
That's where the NYU students go.
Right. But you recognize our neighborhood by a simple word. It's called by many in real estate the East Village, okay? The average rent for a one-bedroom in our properties is, in the East Village, $400 a month for a one-bedroom. And it goes up to about $750 or $850, I guess, for a three-bedroom unit in the East Village. We are a cooperative. We have issued shares to the people who opted to become shareholders, but it was a non-eviction co-op, which most city programs do not provide. Under TILD, you have 3 years to purchase, or else you can be evicted. We are non-eviction co-ops. About 15% of our people remain renters. The purchase price for our shares, the initial tenants, was $250 per unit. We have now raised it to the astronomical amount of $1,800 per unit. But when you move out, what you get back is $250 or $1,800, okay? That's a key to the retaining the affordability. The other key, which I didn't mention when we talk about CLTs, is that the sale of units under the table, which occurs in buildings that are in TILD program, for example, if you're going to pay someone $500,000 or $1 million for your unit, if you have any brains, if you have a lawyer, you're going to be asked to provide clear title. The lawyer says you have to obtain clear title. When they do a title search, they're going to find out that the title is divided between the HDFC and the land trust, okay? We also have other things like a ground lease for 99
Could you
years.
explain the HDFC?
Oh,
For the-
HDFC's Housing Development Fund Company. That's incorporation to provide housing under Article 11. It also makes them eligible for Article 11 tax abatement. It's a good way to go. But that is why our housing has remained affordable for the past 20 or 25 years since we have taken ownership of those properties. And the question is, yes, you can build affordable housing using loans of one kind or another, but that doesn't translate into housing that is affordable to the poorest of the poor or the very low income, okay? I don't have the schedule in front of me, but I think under 80% of area median income, which is the most common affordability level, except for the tax credits, of course, it's like $40,000 for a single person, okay? That is not typical of a low-income neighborhood. And now we're looking to expand. And we have a surplus of close to $1 million in our reserve funds, and we're not in danger of going under because of taxes or other problems.
Did you want to add something? Okay. So I see some hands. Let's take some questions, sure.
Yeah, that's good.
Thank you. Can you say a little more about where the potential is for community land trusts? Like, you know, I'm sure the vision is in that there are benevolent private owners who are going to donate their land for land trusts. So is it like mostly land that's owned by nonprofits, owned by the city, owned by no one? Like, where is the potential to have more community land trusts and, you know, at a greater scale?
Good question. A main source of all these HDFCs, Housing Development Fund Companies, co-ops, or other projects were formerly city property that was taken over for non-payment of taxes or urban renewal, for example, okay? While there's still many vacant properties that are still owned, and Picture the Home has been very instrumental in identifying some or many of them, okay? Particularly during Julian administration, they were given away practically, okay? For-profit, non-profit, okay? So we're looking at other places. Right now, we're working on a project involving church property because the church right now is seeking to divest itself of up to 18 churches, the Catholic Church, around the city, okay? And they're trying to get market value. We're trying to sway them that the principle we've been talking about social equity, which is, while I'm using that term, the churches use other terms. They call it distributism, okay? That the church should be looking upon its patrimony to benefit the poor, okay? And by organizing, as Tom was saying, I think we're making a little bit of progress, but we're still a long way from obtaining. There's one church in particular at Second Avenue that used to be the church where Dorothy Day went to pray. And she's now in the process of being canonized, which means to be made into a saint of the Catholic Church. The Archdiocese wants market value for it, around $40 million or plus.
Dorothy Day was the founder of the Catholic Worker.
Right.
The nonprofit church, remember that?
I want to.
I just want to, I don't, I think it was last year the city put out an RFEI, request for expressions of interest for land trusts, because they were getting approached by so many people who thought this was the answer. I'm not saying it's not, but it's not as though you can easily just say, I'm going to form a land trust, because all these corporations, specifically the HDFCs, need to be incorporated with city approval. So you have to go to HPD and get approval to create this land trust. It's and they don't want all these land trusts out there that they have no idea what's going on. So step one, getting the land trust created is a difficult hurdle. But once that's done, I can't really think of anything that couldn't feed into it. So all of the city programs, for example, that we work with, formerly TIL is now ANCP, for the third-party transfer program, all those city programs, even inclusionary housing projects, could be put onto a land trust. They could be acquired by the land trust through that program or through the developer, like we're doing with Interborough is the name of the land trust that we're forming with Habitat and Manny and CNYC. We expect to put most of our projects onto that land trust through whatever program they originated. So that's
I want to add to this, though, because in my 2008 book, I know in the last chapter, I talk about solutions, and community land trust was one of them. But the other one, and the principal one, was land, control over land. A land trust is a legal instrument for securing long-term control over land. I've been approached in the last 10 years multiple times by people saying, we want to start a land trust. I said, okay, where's the land? You got to have the land first. What Cooper Square did was they fought 50 years to get the land, 40 years before the land trust was formed, to get possession of the land so it can be put into a trust. A trust by itself is a bourgeois invention. It was invented by wealthy people 100 years ago so they could preserve land so that we wouldn't move into their neighborhoods. And, you know, deed restrictions, these are all legal mechanisms that can be used for good and for evil. So the first thing is get in a land trust, but once it's in a land trust, the party's not over, it's just starting. Then you have to protect it. The first major community land trust in the United States was in Burlington, Vermont, when our friend Bernie Sanders was mayor, and it was a political decision to put all of the federal, state housing money into projects that would go into a land trust. That land trust exists today. It's the Champlain County Land Trust. It's county-wide now. It's not just Burlington. And it's very stable and really one of the best examples that we have. But it was a political decision, and it was geared towards using federal funding. So that's the other key is finance from the state, from government, because there is no way that low-income people in this society can live in housing that is unsubsidized, because the market does not produce housing that is affordable to working people. It just does not do it. And guess what? Government subsidizes all housing in one way or the other, through tax benefits, through infrastructure subsidies, through tax write-offs.
Section
The
8.
single biggest national subsidy in the federal budget for housing is the income tax deduction for homeowners. So don't tell me government doesn't have any money. Government can't do anything. It has to do something. And so if government really wants to protect low-income housing through land trusts, there's nothing preventing them. It remains to be seen how serious New York City government is going to be about land trusts. It's just beginning to open its eyes to say, okay, this is an instrument. But without having the financing, the land trust is meaningless. Right. And without having the organizing also, you're not going to get the financing and you're not going to get the land trust. And a community land trust. And that's the other important element in community land trust that John Davis, who's sort of the grandfather of land trusts in the United States up in Burlington, says, don't take the community out of community land trust. Because the community part is what's going to protect it. Because it means stewardship of the land. People in the neighborhood, people who want to preserve the housing, are the real key. It's not the legal instrument. It's not the lawyers who prepare the documents. It's the people who are who step up and say, we want to be the stewards of the land.
I want to say something that's, oh, sorry, go ahead, a question.
Yeah. Some more questions back there.
Yeah.
Yeah, I have a question on financing. So presumably most of us in here probably have our bank accounts at Bank of America or Wells Fargo or something like that. I was wondering why you think more credit unions don't support land trusts operating as community development financial institutions.
Well, we have one credit union that we actually were able to form on the Lower East Side, and it ties right into what Tom was saying. It was a branch of Manufacturers Hanover Bank at Avenue B and 3rd Street, and because they weren't making enough money, I guess, for the neighborhood, they were going to close that branch, which was a single financial institution in those days, about 20, 25 years ago, in the whole neighborhood, the 100 square block area. So what did we do? We organized. First, we organized to try to convince Manny Hanny to keep the branch open, and we didn't succeed. So we organized some more. We submitted a Community Reinvestment Act challenge against Manny Hanny. We entered into negotiations, and the end result was that we got the building, and we got funding to renovate the building, to create the initial credit union, and now that building runs like a $40 million business, and they do make loans for people who want to purchase shares in co-ops or get some work done on their building, and they also provide services for the homeless. But that wasn't done because the bank thought it was a good idea. It was done because we organized and we managed to win that fight, and that's an option. But to organize and to win those fights, you need people, okay? And some of the people that helped these projects to happen, the new housing, you know, Cooper Square or credit unions or land trusts, they've been involved like 10, 20, 30, 40 years, okay? We need a new generation of people to organize and to create not one, not two, but many community land trusts throughout the city of New York. But we need you guys. So I'll make a pitch. If anyone is interested, we can hook you up with different organizations that already have a CLT or would like to create a CLT. There's a lot of work ahead to make those projects happen. Think about it.
One
we
of
just
the
should note that there are 32 new CLTs in New York City. So when the request for interest came out, HPD, that HPD didn't think that there was going to be that much interest. They thought that they were going to get 4 or 5. They actually got 26. And then since then, there's been another 32, and there are probably more. So CLTs, the model is very much going across New York City. And more and more folks are realizing, like Tom said, that the opportunity to own land, especially tenants who are in buildings, city-owned buildings, in failing HPD programs like Till and all that, are now, you know, because of organizing, and, you know, and I'm going to toot PTH's horn, of PTH and other allies in the city who have said to HPD, this is a viable option, and it should be offered just like Till and other programs are offered, as a way for folks to have it out there. So folks are looking at that. Like I said, we sit on NYSE, which is New York Community Land Initiative. They run a learning exchange program now, and there are 32 CLTs that come to the table once a month to learn about CLTs. They actually had the gentleman you just talked about from Vermont speak to us a couple of meetings ago about CLTs. So more and more, and especially in areas of, you know, low-income areas and that historically been black and brown communities, folks are realizing that that is the way for folks in dilapidated buildings to actually take ownership of their buildings, and there's some talk about what a CLT even looks like for NYCHA buildings.
But you have touched on a very important problem, which is financing, because it's from the legal point of view and from the practical standpoint, if any building or property on a land trust, even a regulated property, goes into foreclosure, anybody who are typically lenders look to get market value back. And they have a very difficult time wrapping their processes in their minds around the fact that this would, on a land trust, be affordable in perpetuity. So they can't flip it and get their money, the market rate out of it. So this is a problem, and the credit unions seem to be more sympathetic. It's also a problem for share loans in co-ops. So not just the underlying mortgages, but the individual people buying into the co-ops that are somewhat higher on the AMI level, where they have to go to their corner bank and try to get a loan. The banks want to do it, but when it comes down to it, they see the regulatory agreement which sets the resale prices or the income restrictions, and they freak out. They can't. They get that. So we actually identified this issue when we were trying to convert one of our projects where we had multiple vacancies that we had to fill. And we started a small loan program, which is now growing with some investment from the National Cooperative Bank and the Robert and Jane Toll Foundation. So we got some free money, and we got some relatively low interest money to do these loans. But it's a problem. It's a real hole in the market. And CLTs will run up against this when they have major capital repairs. They don't have the reserves to fund. It will become an issue. So that's part of the organizing that needs to be done, is all I meant to say.
Hi, thank you. So for me, it's very interesting to hear this discussion because I do work with land trusts everywhere but United States, actually, in Africa, in East Africa especially, Asia, Latin America. And in there, when we talk about organizing, it's what we do. We do organize community women, right, to obtain certificates from their tribal chiefs, so enabling them to negotiate for secure tenure. Then we go to the city council to validate the certificate, and this is how we begin. Now, when we talk about organizing in New York context, I think it's a very beast of its own, right? And we reinstated that we need to organize. But in New York City, the reality is that there is a lot of homeless people who do not have any property, right, that they could, let's say, organize to protect. We have a lot of people who are tenants with, annual leases, and every year they have to renegotiate for this. So when we talk about land trust, is who do we organize to obtain land trust? Can we organize just tenants? Do I have to be a property owner in order to organize for land trust? Yeah, who do we organize?
To form a land trust.
To form a land trust.
So we're a homeless organization. Our members are street homeless and formless organizations. And street homeless or in shelters or in housing. And who they organize outside of themselves, right? Because the point for them is to be able to get into housing. So if they are helping organize tenants in dilapidated city-owned buildings, the ultimate goal is for them to be able to have access to those apartments, right? Because the income would be something that they can afford. So it's a combination of people that you have to organize. You want to organize the people who are actually in the building. You want to organize, folks who are homeless. You want to organize the city council and the elected officials, right? You want to organize banks, because even though banks, like you talked about, CLTs abroad, that's because CLTs abroad actually, folks have gotten out the business, right? And said, this is actually what's good for our economy. Here, our bank says, well, we'll lend you hundreds and hundreds of $1 million to build a luxury condo. We'll finance it, and then we'll be like, oh, yeah, but it's okay, you're only 47% occupied. But then we'll say, financing a CLT is risky. You know what I mean? So it goes back to the business and the will of you actually wanting to do it, and that's the basis of this city, you know what I mean, that folks have to talk about, right? Because there are CLTs across this country. I was just in Chicago looking at where the same Bank of America is financing a CLT there to the tune of $2.3 million. So because they see, maybe, you know what they see in it? They see money for them. They see bragging rights for them. They see shares for their stockholders to be able to say, this is all the good work that we've done, right? That hasn't hit New York yet. surprisingly, right? But it'll come, right? Because
I'm
as they see,
suspicious. If
as
Bank
they
of
see it.
America is financing
bad
it,
for America.
yeah, must be bad.
I'm just saying. I mean, for me, when like we went to Grounded Solutions who has a conference every year, and we're in there and they're talking about, and we're there with actual bankers, right? And we're sitting amongst folks who actually finance CLTs, and somebody asked, well, what's in it for you? What is in it for them outside of profit, but even more because the banks have gotten slammed after the failure in '08 and the housing market and the whole nine, right? The trust has to be built up. So for some of them, it's like, listen, let's actually do something, you know what I mean, that we'll be able to say and restore Americans' trust in banking, right?
Well, I have to.
I don't know if I agree with that, but I'm just saying what his answer
I
was.
have to inject a word of caution, though, because I think our CLTs in the United States come in many different kinds and colors. If you go to some of the small cities around the country that have community land trusts, you would never know the difference between them and middle-class co-ops. It's just a different form of land tenure. It's just a different form of home ownership. In fact, they consider themselves more homeowners, but they're in markets where land values don't go up very much.
Right.
So, what's the big deal? Controlling land prices is not really an issue. So you can have limited equity, but you know what? In a lot of these places, equity is limited anyway, because this American dream is really a nightmare. For most homeowners in the United States, it is not a source of building wealth. That's a big myth that's been perpetrated. So if it's in a land trust, it's all very good and well, but when you're in a market where the land values aren't going up, the land trust is where land values are going up, where you have money coming in, whether it's public money or private money, that's jacking up land values, and that's going to create a situation where people are going to be forced out. It's about displacement. That's what it is. That's where you need a land trust. That's why Cooper Square is so valuable, because the whole neighborhood is being gentrified, and people can afford to stay only because of the land trust that's been created. It could be done even without a land trust, to be honest, right? But land trust is extra security, and it works especially in a situation like this, where land values are so volatile that they break up neighborhoods, they displace people, they gentrify neighborhoods, and they force people out.
We also should talk about the city giving away of land.
Yeah.
Right? Because that's like the city selling of plots of land for $1. Right? So it's not that, back to, for me, it's also back to the political will, right? We're in East Harlem, and there are a number of lots across East Harlem that have been given to big developers for $1. Right? We have one, we're on 126 between Lexington and Park. We have one on 123rd between Park and Madison. That's about to be a hotel. We have one on 112. These are all city-owned plots, right? But then when we say to the mayor, these are plots that should go to affordable housing, you know what I mean? Some deal has been cut, and they say, oh, well, you'll get 20%. The one on, I think the development on 112 will have over 1,000 apartments. Less than 200 of those apartments will be affordable, with affordability starting at $34,000 a year, in an area where folks make 23. You know what I mean? But then they say, well, it'll be affordable. Yeah, but not for the folks around there. So, and we're not talking about that. We're talking about, you know, and that's one of the things that us at PTH are forcing to say, like, listen, you know, we're also giving away large city-owned plots of land that actually could have affordable housing developed on. You know, many other folks have gone to the city, showed term sheets, showed how to build, worked with unions, said to the city, this is how you can build affordable housing at levels that actually pleases folks. But, you know, the real estate lobbyists, and when you actually, if you start to actually look into how much the real estate industry contributes to electives, there's your answer.
There's some more.
Good evening and thank you. Good evening and thank you for speaking on a topic that hits all too close home to me, pun intended. I have a comment/question. I'll try to keep it brief, and I apologize if my thoughts seem scattered. But what Mo and you just spoke about, Tom just spoke about, touches on what I wanted to broach. When Barclays Center was built towards the beginning of this decade, quote unquote affordable housing was part of the deal. It's an oxymoron, but nevertheless, Bruce Ratner and Forrest Ratner companies dragged their feet on building this said affordable housing. And now that they've done so, as you alluded to earlier, Mo, more than half of the units are unoccupied. And that brings me to my question. I've been applying for housing lotteries for several years now, and I either make too much money or I don't make enough money. So I just wanted to know, where does that leave someone like myself who doesn't have children, who's not married, you know, because it seems like a lot of these housing lotteries are geared towards families, and whereas for someone like myself, I'm left out in the lurch. So I was curious to hear your thoughts on that. Thank you.
Moving to Atlanta. That's where half of my friends are going.
Just to give you an example about need, okay? We recently had a ceremony for the first 100 units of affordable housing in Sewer Park for seniors, 100 apartments, okay? And we got priority for former site tenants, so about 20 or so actually moved in. For those 100 apartments, they got 260,000 applications.
Yeah, we actually do some of the lotteries for some third parties ask us to do lotteries for them, but we've had to do them for ourselves, and I can vouch for that kind of a response. I think that being said, one of the problems too, where you were saying that you either make too much or you make too little, this definition of affordability is well, it's also never really been defined, and
Right.
and not that we necessarily want it to be, like that's kind of tricky too, but we're not working with homeless people. We're not working with 30% of area median income, for example. We typically are doing 80, but the city is pushing that up to 165 now. And when I say they push it up to 165, they target 165, which means there's very little wiggle room in there. And if you don't make just exactly enough to be able to afford it, or you have too many assets, you're ineligible. So we're always advocating for a marketing band of roughly 20% on either side of what you're trying to target, so that you can get a larger diversity within a project, because it becomes very difficult to get people at exactly 120 or 165 in that huge lottery of folks, and you end up also being at the top of the affordability level. So you're eliminating the folks that need it most, which would be at the lower end of the band or towards the middle somewhere. So that's an issue too that's happening with affordability, besides the fact that nobody really knows what it means.
And these are things that are not set in stone. They could
Right.
be changed.
Oh, they've changed many times in my.
And they are manipulated also in individual cases. So,
And
but
this
it's like a
also the
stone-
area median
stone
income
wall.
makes no sense for New York, right? Because it takes
Right.
into account Nassau and Westchester County, and there are much more micro communities in New York that have different median incomes.
And it's also largely determined by negotiations between the city's housing agency and the mayor's office and developers who they say, listen, our bottom line, we have our spreadsheets over here, and they tell us that in order to do this project, we've got to get 60% at 135% of the area median income. Otherwise, it doesn't work. And then HPD goes to work on their calculators, and they say, okay, well, maybe that's right, maybe it's not. But they can only guess because it's the developers' spreadsheets are proprietary, you know, so they can't get access to them. So it's all a manipulation. And if there were the political will to say more low-income people are going to get this, the other thing that's scandalous is the racial bias in the lotteries, because
Talk about it.
you can't even walk in the front door if you've been stopped and frisked, if you've got a police record.
Or if
Forget
your
about
name
it.
sounds ethnic.
And yeah, and that's yeah. And then you have to have credit. You have to have a credit card. You have to have a credit record. Well, you know, people who are struggling to pay the rent don't go out and borrow money because the banks won't lend it. So if the banks won't lend it, you don't have a credit record. If you don't have a credit record, you can't even enter the lottery. So, you know, the whole thing is stacked against low-income people. One more question. Okay. One more question.
Yeah. The 7,000 figure per month or week, that's an egregious figure. And I'm curious because it also seems to be like a lot of these, it seems to me like a lot of the problem in the city is pretty much engineered by policy people. And I was thinking, you know, in order to resolve a lot of the ill with respect to the disparity in the city, would it be, you know, helpful to get, you know, money out of politics? Because it seems to me that, you know, the politics in New York City is corrupted, and I think, you know, that's what's driving everything out of control and creating the massive inequality in the city. I personally, I voted for de Blasio the first term, you know, the tale of the two cities, and this time around I didn't vote for him, never voted for Mario Cuomo, because I think these people who say they are liberal or progressive, I think they are fundamentally, you know, the problem, and they all need to go, and money need to be removed from politics. So I'm thinking, you know, maybe, you know, people talk about poor people, how can we, you know, organize poor people to push these, you know, issue, and also to demand that money be removed from, you know, the system, because money is the elephant. I mean, campaign reform is the elephant in the room that needs to be addressed, in my opinion.
How about we close with everybody getting their final word on money in politics,
Money
or
in
not?
There's one word that defines how New York City, or who runs New York City. That's fire. Finance, insurance, and real estate. And they call the shots. I think we're better with de Blasio than we were with prior politicians, prior mayors, even significantly so. But ultimately, fire is what runs the city. And the only way to counter that, since we don't have the capital, is to organize. That's our capital. And we ignore that to our own, what can I say, defeat. Once you stop organizing, you're finished.
Yeah, I just would echo that by saying we have seen instances where the city, in their defense, they do listen to their constituents. The council people, they do listen. So it's keeping the pressure on, which I know you were saying in your report, it's very fatiguing to continue to do that year after year, but that's what's necessary. In my short run at UHAB, the administration has changed at least 5 or 6 times, and we've had to reteach those individuals about what's just occurred. And so the organizing and the momentum needs to stay there. And I think that is the key, really, because they will listen. We've had instances where projects have gone beyond that timeline, but we know when it comes down to it that the city and the banks are not just the banks maybe, but the city is not going to pull the plug if the tenants speak loud enough. And the community speaks loud enough. If they insist, change can still happen.
So I'm always people over profits, right? I think people come first. I don't see us, we're asking to remove money from a system by people who have to vote on it in the system, right? So that's not going to happen. They're not going to vote to say, "Oh, campaign reform." No, because they're you know what I mean? They're profiting off of that. But what it does mean for us and other organizations in this city is to be able to make clear to folks that we vote for, because I think after we go in the booth and we select somebody, we feel like that's it, and by osmosis, the person is going to do what you thought that they promised you to do when they were trying to get your vote, right? You think that, oh, they're going to remember. Yeah, wrong answer. They're not going to remember. And there's a whole different set of pressures that come up after you win. And that's why organizing is not just necessary, it is vital. Every win that we've gotten in this city has been because of organizing. It has been because people have said, especially to electives, that I put you in there and I don't have any problem taking you out of there if you are not held responsible to why I put you in there. And some along the way, people have said, oh, I don't want to vote, I want this, I don't want that, and forgetting that it's not about going and just ticking off a name. It is about actually holding the person responsible and accountable to why you got them in there. Right. And that is the reason why, because trust and believe, there is a slim difference between Bloomberg and de Blasio. Slim. Right? And we didn't think it was going to be this slim. Trust and believe, organizations across who's been working did not think it was going to be this slim. And we have been vastly disappointed. But that's where we realized that, okay, that means we don't organize less, we actually organize more, to remind him that we are the folks that got you in here, and when we really decide, because there really was no other choice, that you weren't going to be mayor, he wouldn't have been mayor. And you have to remind him of that. And all other city council, right? CLTs now are starting to bubble because of organizing, right? It is because of organizing and because folks across this city has said, this is a viable option. We no longer want to tolerate gentrification in areas, and we're going to push back and we're going to push hard. So I think I want to also echo, Val, that folks have to join in the fight. It can't just be homeless folks fighting against homelessness, right? People can't just be like, oh, yeah, homelessness suck, and then do nothing, right? Join the fight. It can't be like, oh, CLTs sound really great, and let somebody else do it, right? If we want this city to stay diverse, if we want this city to, we want elected officials to stay accountable, then we actually have to get out there, put some skin in the game and actually shift and demand of folks what it is that we know we deserve. Or else this city will truly be the tale of two cities, and it will continue to be what we see, which is the haves and the have-nots, and those of them, like you were talking about before, who are caught in the middle, because I'm there too, who make too much for this and too less for that, will then, yes, move to Atlanta. Because you cannot, and I don't want to move to Atlanta. It's nice, but I don't want to move there. But you'll be caught in this matrix of, of not being able to afford a place. Exactly, ever, right? Like, and that's just sad and difficult. So I think we, when you see folks asking you to come out, organize, protest, the whole nine, trust me, that all matters. It all of that protest, all the physical actions of, you see, like the March for Our Lives or Black Lives Matter, that all are visual representations to people who we elected, that the people who elect them are pissed about.
Well, there's not too much I could add to all of that, except to say that I have just finished an article that is titled something like de Blasio, the America's leading progressive mayor, not. Because what I think has happened is we got a mayor who branded himself, just like we have a president who got branded and knows branding. Read Naomi Klein's book; it's really excellent. After the Trump election, it's all about branding. I'm a progressive. What is a progressive? You come out against stop and frisk just at the moment when it looks like the court is going to overturn it. Yeah, okay, we'll give you that one. And then you talk about the tale of two cities, and you take the Bloomberg playbook and you apply it, not just in the 40 neighborhoods that were rezoned under Bloomberg, because he pretty much did all of the big real estate deals, but then you take 15 communities of color and say, I'm going to rezone because I like communities of color. Oh yeah? So, oh yeah, well, I'm against gentrification and displacement, but let's be real, it's going to happen. There is no alternative. That's the stuff that's coming through, not just the New York City Democratic Party in New York City, but all the way up to Washington. It's like, this is the reality. You little kids have to learn that this is the way it's going to be, and you're going to, just like Atlantic Yards, you have to learn how to get your little crumbs, because the deal, it's a done deal. I know we worked 6 years against Atlantic Yards, and that was the phrase. It's a done deal. And so that's what the only thing that turned that around is people organizing and saying, no, it's not a done deal, because we're not going to let you get away with it. And yeah, we had great expectations. De Blasio's not by any means the little fascist that Giuliani was. And we can give him credit for some good appointments and some good changes in policy. But this is not the progressive city that we expected and we wanted. But it's the progressive city that his advisors and his poll takers told him he could win the election on. So we still got to organize.